Hi, welcome to the Strategy Debrief. I'm Chamila Ranavaka, MBA student at Postgraduate Institute of Management. In the next 15 minutes, we will see how Hayleys PLC turns strategy into performance and whether the growth is creating sustainable value. The annual report of 2025-2026 is titled as The World of Hayleys in Full Circle. Let's see what that means. Here is our roadmap. First, let me explain Hayley's strategic direction, its vision, mission, and 5 strategic pillars. Then I'll assess its external environment, competitive forces, resources, and capabilities. Next comes competitive strategy, diversification, structure, people, culture, and leadership. Finally, I'll connect the strategy to the financial results because a strong strategy must ultimately create returns, cash flow, and resilience. Hayleys was founded in 1878 and is now one of the Sri Lanka's largest listed conglomerates. It operates across 14 sectors, more than 182 business units and over 80 markets with 12 listed entities and 38,746 employees. In 2025-2026 financial year, group revenue reached a record of 585 billion rupees. Its AAA LKA national rating also supports access to capital. This scale gives Hayleys resilience, but it also creates a strategic challenge, coordinating many different businesses without losing focus. Hayleys' vision is to be Sri Lanka's corporate inspiration at all times. That is an aspiration for leadership and reputation rather than a narrow market target. Its mission links superior shareholder value to the potential of its people and leadership in domestic and international businesses. This reflects resource-based view. Values comes not only from products but from people, knowledge, relationships, and organizational systems. Its values summarized through Hayleys and I, which includes honesty, accountability, teamwork, humanity, customer value, and the will to win, social responsibility, innovation. Together, they define how the strategy should be executed. The vision becomes practical through 5 strategic pillars. Portfolio optimization directs capital towards resilient, attractive businesses. Customer centricity focuses innovation on changing customer needs. Nurturing inspired teams build leadership and capability. Inclusive business models create value with suppliers and communities, while strategic ESG integration embeds the life code commitments and into decisions. Digital transformation supports all 5 as an enabler. This is a strategic cascade. Group priorities are translated into sector plans, targets, and operating actions. What matters is whether those actions gain competitive advantage and financial returns. Vessel analysis shows a demanding environment. Politically, geopolitical tension and trade disruption affect energy, freight, and export routes. Economically, Sri Lanka's recovery supports domestic demand, although currency, interest rate, and import risk remain. Socially, changing customer and employee expectations require inclusion, reskilling, and better service. Technology creates productivity through automation, data, and AI, but also cyber risk. Environmental pressure is increasing around energy, water, emissions, and climate resilience. Legally, data protection and sustainability reporting requirements are becoming more important. Therefore, Haley's response is diversification, digital investment, and stronger ESG systems. Porter's hypothesis explains why execution is difficult. Rivalry is high in export manufacturing and domestic retail. Buyer power is also high because global customers can change suppliers and consumers can compare price, service, and financing. Supplier power is moderate to high, partly reduced through backward integration and long-term networks. Entry threats are low to moderate where capital certification and distribution create barriers. Substitution is moderate, including synthetic materials and digital channels. Hayleys must achieve both scale efficiency and differentiated, certified, service-rich products and services. It cannot afford to compete on price alone. The short summary is balanced. Strengths include trusted brand, scale, AAA LK rating, global niche leadership, and 13 of 14 sectors reporting profit before tax. Weaknesses are margin compression, rising leverage, weak cash flow, and portfolio complexity. Opportunities include integrating the new customer consumer platforms, growing value-added exports, using digital tools, and making ESG market differentiator. Threats include geopolitical and trade disruption, climate events, input price volatility, and intense rivalry. The central issue is not growth potential, it is converting a broad portfolio into consistent cash generating advantage. The VRIN framework analyzes whether a resource is valuable, rare, difficult to imitate, and non-substitutable. Hayleys global positions in activated carbon, lows and core score strongly, while Singer's brand and distribution network remain valuable but have partial substitutes. Manufacturing depth and supplier relationships are also difficult to reproduce quickly. So the strongest advantage comes from resources competitors cannot easily copy or replace. The market evidence is significant. Hayleys contributes around 5% of global demand for latex household and industrial clothes and hold roughly 16% of the coconut shell activated carbon market. It also had leading positions in Sri Lankan used durables, transportation and logistics, and value-added agricultural exports. These positions provide volume, customer access, and learning effects. The portfolio also expanded through mobility supermarkets and 40.63% staked in Harishchandra Mills. The strategic question is whether these new domestic platforms will deepen the ecosystem and produce returns above their cost of capital. Hayleys does not use one generic competitive strategy across every sector. Hand protection and purification combine cost efficiency with focused differentiation through scale, certification, and backward integration. Textile is moving towards specialized high-value fabric. Consumer and retail users both differentiation through trusted brands, product range, distribution, and financing. Its revenue grew by 44% to 156.74 billion rupees. Transportation and logistics competes through network reach and integrated services. Plantation depends heavily on operational efficiency and value addition. Harishchandra's is best viewed as related diversification, extending consumer reach into established FMCG categories rather than building a new brand from zero. The strategy also depends on timing and scope. Hayleys entered and scaled leisure through businesses including the Kingsbury and Amaya. In 2017, the acquisition of Singer was a major turning point, adding consumer reach and helping the group exceed $1 billion in revenue. Lifecode introduced in 2022 formalized the ESG roadmap towards net zero by 2050. In 2025-2026, Hayleys expanded into mobility and supermarkets, invested in Harishchandra Mills and raised capital through a 9 billion rupees rights issue. These are bold moves, but timing matters. New investments must stay integrated while leverage and cash flow are already under pressure. Does diversification create value or simply spread management too thin? Hayleys shows both related and unrelated diversification. Rubber supports hand protection products while coconut imports connect activated carbon and core-based businesses, creating economics of scope. Consumer retail and FMCG can share brands, channels, and customer insight. Leisure and construction materials rely more on portfolio logic. The parent adds capital allocation, governance, talent, and reputation rather than shared operations. Through ENSOP's metrics, the group pursues market penetration, product development, market development, and diversification. The parenting advantage exceeds only if group capabilities create more value than independent ownership would. When it comes to the structure for execution, Hayleys uses multidivisional Structure. The board sets direction and oversees the risk. The group management committee coordinates the five pillars, while the strategic business development function supports formulation and portfolio decisions. 14 sector leadership teams retain operational freedom to compete in every different industries. This balances central control with local responsiveness. Strategy, capital allocation, governance, and ESG guardrails are coordinated at group level while execution remains close to customers and operations. The risk is complicity, so clear accountability and performance are essentials. Strategies executed by people. Hayleys employed 38,746 people and delivered 579,104 training hours, 33% more than the previous year. Workplace injuries fell by 26% and no corruption incidents were reported. The culture emphasizes accountability, innovation, teamwork, customer value, and social responsibility, supporting coordinated action across a federated group. However, women held only 12% of board positions, and succession depth remains important in leadership model with strong central influence. Talent, inclusion, and succession should therefore be managed as strategic capabilities, not just human resource indicators. Let's go through the financial figures. When it comes to revenue, it rose from 435.3 billion to 490.6 billion and then 485 billion. However, while latest year revenue grew 19.3%, PBT increased only 3.6% and PAT declined by 1.3%. So this indicates weak profit conversion, possibly due to integration cost, financial pressure, and capacity investment. Strategically, growth creates value only when it improves margins, cash flow, and returns. The latest results confirm this tension. Revenue reached 585 billion, PBT 38 billion, and PAT 22 billion. EBITDA increased by 7.6 to 64.82 billion but grew slower than revenue. Meanwhile, capital expenditure reached 33.37 billion and debt rose 41.7% to 289.66 billion. Hayleys must convert these investments into cash before rising financing costs reduce flexibility. Ratio analysis gives the clearest warning. Gross margin fell from 24.88% to 23.28%. Operating margin to 8.44% and ROCE to 10.73%. Debt to equity reached 189.89%. While operating cash flow shifted from positive 30.43 billion to negative 10.5 billion. Although the share price and EPS increased, Hayleys must improve margins, cash conversions, and return on investment. Hayleys' strategy is coherent and supported by valuable resources, sector-level competitive positioning, a multidivisional structure, and a purpose-driven execution system. Diversification has created resilience, but the latest year proves that scale alone is insufficient. Therefore, four priorities should follow. First, enhance capital discipline through hurdle rates, the better of test and stop scale reviews. Second, improve margins and cash through pricing, procurement, automation, and working capital accountability. Third, measure corporate parenting advantage through real synergies in distribution, logistics, data, talent, and ESG. Final one is deepen succession and board diversity. Haley should continue to grow where strategy fit, parentage synergy, and financial return reinforce one another. To conclude, Haley's delivered exceptional scale in 2025-2026 financial year, but the next stage about quality of growth. The evidence discussed here comes primarily from the Hayleys PLC Integrated Annual Report 2025-2026. So that's all for today. Thank you for listening.